Hello, and welcome to my channel. My name is Gloria Zoe, and popularly known as the Pip Grabbing Chick, and this is the video where I'll be teaching you the fundamental principle of market structure. Now, in this video, I'm going to be as generous with information as possible. Anyway, I've always been generous with information on all my videos anyway, so for those who have subscribed to my channel, well done, congratulations. I'm very sure you've been getting values on all the videos I've dropped. And for those who are brand new to this channel, if you want to subscribe, and be sure to click the notification bell so you get all the videos as they drop. Yeah, it's been a while I dropped the video because I've been having some technical issues behind the scenes, but hopefully that has been sorted. So from here on out, we're going to continue giving out value because the whole essence of this channel is to teach you strategies that works, to teach you how to profit. Most strategies out there are designed to waste your time and also take your money. But this is the channel where we show you the strategies that actually works. And one of those strategies that works is market structure. On most of my videos, I've taken tidbits of market structure in terms of talking about the technical analysis using the technical indicators, talking about technical analysis using some simple basic market structures and all that. But this time, I'm going to be walking you through the basics of market structure using a clean chart. As you can see on my screen, this is a clean chart. There are no indicators here, and everything you're seeing is just straight up raw market structure. All right. Once again, if you're new to the channel, don't forget to subscribe. And if you find value with the video, don't forget to share with your friends so that they also can trade this market profitably. So market structure, what is it all about? Structure is just basically, something that follows order, something that is well applied and all that. So that also applies here in the market. Like I said in all my videos, that as far as money is concerned, everything follows a strategy, everything follows a reason. So if these guys are going to drive price to a particular direction, there's a reason why they're doing so. They're going to drive price down, there's a reason why they're driving price down. They're going to drive price up, there's a reason why they're driving price up. So for every time the market moves in a particular direction, there's a reason behind it. And that reason is seen as market structure. For basic trading, I think I did a video on identifying a trend. So if you've not seen that video, go check it out. Especially if you're new to Forex, go and check out the video. Basic trading is that you already know that the market will move in either of three directions. To either move towards the downtrend, move towards uptrend, or it begins to move sideways. Sideways market is called a consolidating market or a market that ranges. So when you're seeing a ranging market, those are markets that most traders avoid. You don't trade ranging market. Mostly avoid a market that ranges. You only trade a market that trends. So the market is trending towards the downsides. You're looking for sell opportunities. The market is trending towards the upside. You're looking for buy opportunities. These are all the fundamental basics of trading market structure. So now that you've known that if you see a market trending towards the downside, you're looking for sells. If you see a market trending towards the upside, you're looking for buys. How then will you be able to identify these buy and sell opportunities? And today, I'm going to teach you a very simple strategy that will help you identify this simple buy and sell strategy. Now, this strategy is called the M's and W's strategy. Now, some people call it double tops and the double bottom, you know that. But the bottom line is that when you look at the way the strategy or the structure is shaped or designed, it looks like an M, it looks like a W. So I did a video on trading M's and W's, how to spot them. It's also on the channel, so go check that video if you've not seen it. This is not a video where I'm going to be showing you how to spot them. This is a video where I'm going to tell you how to trade them, right? So when you see a market that is trending towards the downside, the reason what you're looking for is sell opportunities. So it's often best for you to start looking for sell opportunities at the onset, at the very beginning, at the very early opportunity. You want to look for the earliest opportunity to enter a trend. You don't want to trade an exhausted trend. If the trend is already feeling out, or the trend is already about to complete its move, that's not the best time for you to take a trade. You always want to make sure you look for a fresh brand new thing. So if I'm going to trade this is United States dollars, South African rand. I'm going to trade this. This would be me looking for buy opportunities. Why? Because this has been a continuous downtrend, right? So right now we're looking for a change in direction. So we're looking for a change in direction. What do we need to see to indicate a change in direction? In this case, we want to see a W, right? Because the W signifies a market about to change towards the buy direction. It's the reason why some people call it the W bottom. So the W signifies a market about to change towards the buy direction. So you can see the first leg right here. You can see how the market has created the first basis of the W, and it has given us a neck version of it. So that is seen as the neck. So what we want to see now is for price to do another dip to give us a second leg, right? So this is just simply W. It's shaped like a W. The reverse of it is the M. Take a look at it right here. You see how at this point the market, having done some move downwards, it peaks at this point, did a clean drop, right? Did a clean drop right here and peaked out back down. What did it do? It went all the way back up to give us that clean information right here. Now, in subsequent videos, I'm going to be talking about the different variants of the M and W. In this video, I'll just walk you through how you can begin to spot entries using the M's and W's. Remember, this is market structure, lazy version of it. So you're going to stick around for subsequent videos where I'm going to be teaching you different variants of the M's and the W's. So like I said, when you see a market trending towards the downside, you're looking to sell. So what are the things you look for sales? You want to look for the M formation or the M pattern or the M shape or the M structure. Because seeing the M structure tells you that the market has more potential to continue towards the downside. And for the reverse of it, when you see a market that has continuously trended towards the downside, and you're looking for an opportunity or a reason or a sign or something to let you know that the market is about to change direction, then you want to look for W's. So these W's are now going to direct you towards your buy move. So here's a question for you. How then will I now take this move, this market? So I've seen that this has created this first leg. That's what this is called. This is called the first leg. I've seen it create a neck, and I've seen it create a second leg. So what's the next thing to do? The next thing for you to do is to look for opportunities to take a buy here. Now that taking a buy at this point is best for people who are experienced traders. There are indications that will now lead you as to how to know that point is ready for taking buy. So these indicators will be discussed in subsequent classes, alright? So I don't overload the information. So first though, the first place to take a buy from is this point. But where you are being very conservative, you're being careful, you want to be sure that the market will not continue down. Because some people say, how am I sure that the market will actually stop right here at this zone? Because you've seen the first zone here. This is a zone of reference, and the market pushed up. So we're expecting it to come back to this point of reference, continue towards the upside. So how are we sure that the market will actually respect that point? So why don't we play safe by staying here? So that's the point when some people say you want to wait for a breakout. So they tell you that you want to wait for a breakout, you want to see price move considerably out of this point, breaks out of it before you take a trade, right? So these are the two ways that you can trade the M's and W's. This same rule applies to the M pattern, alright? So this is the W. This is the neck region. The first way to take a trade is this point. There are rules to taking a trade at this point. So before you begin to attempt to take a trade at this point, you want to make sure you master those rules. And as you already know, I have a 17-part video course where I have discussed extensively. I like to use the word exhausted the whole strategy with regard to market structure and trading profitable strategies. Everything you need to know about Forex trading, everything you need to know about advanced trading, everything you need to know about trading profitably is discussed extensively in that 17-part video. And one of them is knowing what to see at this point to take this trade. Like I said, this point, taking a trade from this point is not for somebody that is brand new to Forex, because you might think the market is moving at this point only for it to continue downwards. When I talk about the different variants of the W, you will understand why taking a trade at this point has a lot of risk, because this can continue towards this point to give you an extended W, or it can just stop right here. So for people who are yet to master the art of taking trades from the second leg, the best advice is for them to take a trade at this point. So what do? You wait to see considerable moving price. You wait to see the market continue to move, continue to push and push and push. You want to be sure that it breaks this point. So you want to see that clear break before you can also, if it's time to take this. So you want to see that clear break, right? And of course, after a break, what do you expect to see? You expect to see a retest. So you've seen the break, you want to see a retest, and then you take your market. So if a break is going to happen at this point, you now there is a zone here for you to now say, okay, this is the zone where I can now begin to watch for a retest. So there's a zone right here. So you're creating, all of these zones, you're creating zones for you to take an entry. They are fun for you to begin to take an entry. Right? In one of the modules in the 17th part video, I did talk about what this whole value is for. This market that you're trading, the reason why it's called rate of exchange. The reason it's called rate of exchange is that you're exchanging one currency for the other at a particular price. So for every time that you're taking a trade, you're taking a trade at a particular price. So your goal is not just to jump in at any price, your goal is to jump in at the best price. Right? You're always going to look for the best, but that's smart money trading. If you're just jumping in at any price, that's dumb money trading. So jumping in at any price is you hoping to get lucky. But smart money trading will help you see the right price taking market, because when you're able to do so, you will take yourself out of the 99% retail traders who are trading dumb money. And what does dumb money say? You should trade dumb money. Say you should begin to, if you see it going down, you see it going up, you buy. You see that support, you buy. See that resistance, you buy. All of a resistance to sell. All of those are dumb money traders, and all the other 1 million and one strategies that are out there, and all the indicators that are being sold, and all the EAs and all of these are just take your money. For a smart money trader, I'll tell you truthfully that most times that you're on the chart, you're looking for opportunity more time than you're entering trades. So you could be on the chart and you could need to wait for the opportunity to present itself. You could need to wait for like 2 days, right? The opportunity to present itself, and then you might just end up trading 1 day in the week, or maybe just twice in the week. But the bottom line is that for you to take the trade that's the best trade, you better have 2 good trades and 10 irrelevant trades that will just make you lose money. Right? So being a smart money trader will help you become very, very conservative and help you trade only what works. So just talk about being able to spot the W formation or the W pattern based off seeing the market that has been trending continuously towards the downside. So what is the reverse of this? What is the reverse of a structure like this? Can we now begin to look for the reverse? Say we're looking for a market that has been trending towards the upside, and then we want to see a reversal and see if the market is going to change direction. So here's an example of the consolidating market. You see how the market is given information, and it has just been in this service for quite a long time. So it's always very important that you don't trade consolidating market, because they will just trap you in too much waste of time. Right? So here is another example of the market that has been moving in a particular direction. I'm going to take this all the way back. Alright, so here's an example of a market that just gives us another formation. Can you see this right here is the clear information? You can see how the market did a dip, so it picked up. So in other videos, I'm going to talk about the levels. But for this video, we're only teaching you how you can now begin to trade with M. So just to talk about the W. So let's talk about the M now. Like I said, the best place to trade it is from the second leg. So you've seen the first leg play out just right here. the market at this point, having done a considerably upward move, it peaked at that point and it couldn't seem to continue, then it did a forward drop. Then what happened next? Market continued towards the top, and this is the point where you take a trade. So like I said, this was the point of reference, right? Where you can see that the market gets up. So this is another variant of the information. We'll talk about that. That's another variant of the information. So this right here takes you down, all the way down. So what did you say with regards to trading this strategy as a beginner? So you want to make sure you see that break. So seeing that break will help you enter at a safer point, at a safer zone, right? So being able to catch that break, be able to enter at a safer point. So there's a reference here. So personally, I would have just pointed out that reference. You can see how it braced it and it pushed all the way back. So that's a good point that you take the trade. Waiting for the break is a good place to start. Other than that, there are strategies that will help you trade from this point. I trade from this point, right? I've been able to master the strategies to know what to see to trade from this point, and I've been able to exhaustively discuss that in the Something Hard video course. If you want to access the Something Hard video course, check the description section, click to buy, and just start watching it. It's a Something Hard recorded video that you watch at your pace, you pause and play, and keep watching it until you gain mastery of the market. Right? So to wrap it up, we talked about being able to identify market structure using the M's and W's. So we said the first thing you want to see the direction of the trend. You've seen that this trend has been a continuous downward move, and the trend has been a continuous upward move. So as the trend is not a continuous upward or downward move, the next thing you want to see is an indication to show that the market is about to change direction. So we call it reversal pattern. And I think we call it double top, double bottom. So we call it M's and W's. So whatever you call it, the bottom line is that these patterns signal the market changing direction. So this right here, an example of that, you can see how the market continues to spiral all the way to the top. And the reverse of it is the M formation. And we said there are two places you can take the trade. You can take it from the second leg, or you can take it from the middle, which is the neck region. You see how this one gives us a third leg, right? So this is seen as a triple bottom W. The bottom line is that they are both the W's. So taking the trade from this neck region will take you all the way to the top. If you have any questions to ask, don't forget to drop in the comment section. I'll respond to the questions as best as I can. And if you want to talk to me one-on-one, you want to check the description section. Also, click my WhatsApp link there. Talk to me. Be sure you're not spamming my WhatsApp, because if you click on the WhatsApp link just to spam it, you can rest assured that I will block you. So the only thing you want to ask me is that if you do want to come to my WhatsApp to ask questions, to ask more about starting the class, or to ask more about Forex, right? So this is a video, this is a channel where we teach you strategies that actually work. Gloria Day. Thank you for watching. See you again in the next video. Have a good one.